I take it it's a bit cold over there, is it?
33 degrees today.
Jesus Christ.
Lovely.
Have you had any sleep? Because you were on last night, and that's early for you, isn't it?
Yeah, I've been up since about 4 o'clock. I had a little nana nap earlier on.
Well, I watched a thing last night. I don't know if you ever watch a guy called 42.
Yeah.
Sometimes his stories are pretty good. And I quite like the guy. And last night, there was a one came on, and it was about sleep patterns and how we've changed the way we sleep. Now, Fossil will know what this is about, because in the 1700s and 1800s, they used to have two sleeps.
Yeah.
So they would go to bed at 8, 9 o'clock, get up in the middle of the night after a few hours, and it was like they'll do chores, have a chat, contemplate life, do a few, and then have another kip, like from 4 o'clock in the morning till when they get up again. So maybe that's what you're doing, kid. Maybe that you've reverted back to the old age.
Yeah.
Siesta.
I still do that, but I've got to get up and have a pee.
Well, I was going to say that's the reason I have as well. Like I said, saying last night about falling to bits as you get older.
Yeah.
I used to be able to go to sleep and that would be it next morning. Now we're up 2 or 3 times in the middle of the night now.
Yeah.
And bloody piddly Petey every other hour. The bladder of a 3-year-old. Never mind.
Well, since we moved into this house, we've always had blinds, and I said to Bev, I said, I'm getting fed up of being woken up too early, so we then got blackout curtains to go over the blinds, and it's brilliant. I've had the best night's sleep ever since doing that.
No, we've got blackouts. They're great.
Yeah.
That's, I don't know.
They're great until you have to get up for a pee and fucking find your way to the toilet. You like that, aren't you?
That's where this comes in handy.
Yeah.
Get your little torch out. But I know exactly what you mean. It's a right balling. And the worst of it is when you're in kind of a deep sleep.
Yep.
And you're almost disorientated. And then if you've had a drink as well, oh dear. Yeah. When we were kids, and this is bizarre, I mean, just chatting while people are wandering in. I can remember sort of being 18, 19-year-old, and we'd go out on a Wednesday night. We used to do something called a 10-pint Wednesday. And we used to go to Chesley Street and do the whole strip. So you start either at the Red Lion at the bottom and work up, or the Black Horse down. But we used to end up in Crocs as well. Remember Crocs?
Yeah.
Yeah, you used to end up in there, like 2 o'clock in the morning, drunk as lords, waddle home and be at work at bloody 7:30. If I did that now, I'd be in bit.
Yeah.
Thursday, can you remember Thursday night down Chester? It was cheap night. It was £1 a pint or something like that. You used to go down there with 20 quid and you come back, you had a kebab and you got bladdered for 20 quid.
Yeah. What was the pub in the middle? It was a big giant pub.
The Lambton.
The Lambton, that was it. The Lambton. That's where we used to always hang out. Or we work our way into that one. We had some laughs in that place. But the Black Horse at the top was always a hoot. We used to like that barrel with the nudie pictures in it. Can you remember that? They used to have a barrel, like a big whiskey barrel. It stood about this high. And that little peepholes rounded. But when you looked in the peephole, they just plastered like Penthouse and Mayfair and everything, and like all nudie pictures on the inside. You couldn't get near the thing. Everybody's like, see what's in there this week. We knew how to enjoy ourselves in the northeast, boys. Our simple pleasures and all that.
Oh yeah.
We had cinemas down south, but
that was our version of it, to be honest. But yeah. Okay, kids. It's coming on to half-past. Read the disclaimer. I'm not a financial advisor. Nothing in this video is to be taken as financial advice. The talk is basic education and entertainment purposes only. I'm not responsible for any of your trades, which must be taken on your own research. And we're also of an adult nature and a non-woke nature. If you're easily offended, this may not be for you, and viewer discretion is advised. Everybody happy with that?
Yeah.
Yep.
Load of
We
bollocks.
still crack on. Hey, up, here's Hollywood. How you doing, boy?
Yeah, not bad. Yeah,
Are you ready
yeah,
for
it's
Christmas?
busy.
Son? You busy?
Yeah, I'm working right up to it. I managed to get Christmas Day off in the end, so that's good. I wasn't
Well
really
done.
down for it, but yeah, so
Oh, well done. Well, it's the big day well, I'm not sure whether you have this down in Cornwall, but up here tomorrow's Black Eye Friday.
oh yeah, I'm out for it as well. Black Eye Friday, yeah, definitely.
Are you guys aware of what that means?
Nope.
I tell you what it means on Newcastle. You didn't.
Oh, well, it's tomorrow, isn't it?
Yeah,
Black Eye Friday. It's I don't envy you, kid.
good reason.
I don't envy you at all. It's wild up here. Durham's nightmare. You avoid it like the plague, because come 12 o'clock, by the time it hits 7 and they've been there all afternoon. Fucking hell. Wild.
Yeah.
Absolutely wild. So, kids, getting ready for Christmas as we are. I'm pretty much switched off now. It's been a good old time of things. It's had its ups and its downs, and as we do, getting ready for the fat fucker to come and bring me some turkey and some Christmas pudding. Actually, we had a big debate on that. Joanne's like, nobody eats Christmas pudding. I'm like, oh, no. You gotta have Christmas pudding.
Yeah, I like Christmas pudding.
Oh, it's fucking horrible.
Too rich.
How dare you?
Oh.
It's only once a year.
Mind, I've never tried it for about fucking 20 years, like, so.
You've got to have Christmas pudding. It's like turkey. I mean, she was talking about not having turkey. I'm like, no. Go get a turkey crown at least. You know, so that's my question to you lot. Are you lot having turkey at Christmas?
Oh, yeah.
Turkey crown, yeah.
There we go. Happy days. Let's open Q&A. Off you go.
That's it.
How about with charts? Do you put any sort of kudos to shapes and charts? Because looking at gold this morning, it's got the classic cup and handle thing that they always go on about, and it's going to zoom parabolic and all that. Do you put any weight in that at all, Scruff, or not?
Personally, I don't, to be honest. I do to a degree. Sort of, you can see a classic head and shoulders pattern, if you like. You can see a wedge coming in, all of these different things. But I'm of the opinion that if I can see it, someone else can see it as well. And they'll have a chance to use it against me. So that's kind of where it starts and ends for me. I'm more interested in the levels, because the levels to me are a pattern as well, for no other reason that they were formed for a specific reason. Somebody bought and sold at that point at high impact because it's the only way the market could turn. There had to be a huge amount of money involved at that point. When you see a pattern, you don't actually know if the money's there. You just assume the money's there, if that makes sense. But they're quite good for putting your timings in. You sort of think, well, we're up to a level. I can see the wedge is coming to the end, you know, or in this case, cup and handle. You can see all of these different elements. So it's a case of putting them all together rather than relying on a single entity, if that makes sense. It's why
So you almost know what other people know, and it just reinforces where you think it's going to go.
yeah.
Yeah.
Ultimately, if I was to boil everything down into the basic terms, I'll go, right, my levels are the first thing that I ever want on the charts. I don't care about whatever's happening with wedges and because you'll see a doji, for argument's sake. You'll see it, right, doji, indecision, whatever the next candle is, that's the direction. It doesn't always happen that way. And that's because you're already told that's what's going on. It's like you see a hammer formation. Oh, huge tail, small body at the bottom, therefore there's a change in direction. Yeah, if it's at a level. because then that level's holding. But why is the level holding? Is the Bollinger Band closed in, telling you there's no strength? Is the RSI in extreme, telling you the momentum's coming to the end? And is the general direction kind of closing in on itself or actually changed altogether? It's a combination of multiple things rather than relying on one thing. And I think it's, how do I put this? It's kind of law of averages, shall we say. The more ducks in a row, the more weight you have to your idea. But if you're relying on a single idea, well, somebody can use that against you. And I think that's where people go wrong quite a lot. Because if you can imagine, you see this starburst, this hammer. Everybody tells you that's changing. So you'll go, right, long tail, short bodied to the bottom, I'm going to sell it. And what happens? Yeah, sells for the next candle. So it's induced everybody into that trade. Where's that stops? It's on the top of the star. They'll turn it round and they'll push the market higher using your stops. And then the bigger boys will sell. So it actually works against you. Do you understand what I'm getting at with that, guys?
So the market makers know where the tail is, and know where you're going to put your stops.
They don't actually know where they are, but they've got a good idea that's where you're going to put them.
Yeah. You
know, and then there's also the 2% rule and things like that, because you're always told put 2% of your account on, so they can actually calculate roughly how much is up there. You know, you go, right, 2% of account, average account is 2 to 5 grand. X amount of people are in the markets on a daily basis. That's probably where, well, I know it's kind of nicknamed dumb money. That's where that is. So what do? Let's see if we can get a few more in. So they'll give you a little bit of candle, a bit of cheese, and you were probably right. But then the market screams up with a couple of big candles for 2 hours, wipes out that high, takes your stops, which naturally pushes the market higher again. And then what do? They go, right, everybody's in. Everybody now thinks the market's going the wrong way. So now what do? They put buy orders in. Where's their stops? Back in the same place where the other ones were, but the opposite direction. And then they sell the market down into it. And what they've done is they've used them patterns and what you're taught to create their own orders and work against you. So the easiest way to do it is go, okay, where is the full exhaustion point? And it'll normally be in and around a level, and normally the fib, I mean, how many times you put a fib on and the fibs has respected it almost to the pip, especially on an extension of a break. So you see a structure and it breaks out to the 127, it'll go to the 127, boop, and then boom, straight in the direction that you thought. So that brings you structure. So that's what I rely on. I just rely on the levels and the expansions. But if I've got my direction in place, it'll normally forgive the bad entry.
Well, that's the same as gold this morning. Glenn was on about, so daily's down, 4 hours down, 1 hour's down, and I like all three to be in the same.
Yes.
Then I like to zoom out, have a quick look. But what gold's done this morning during the night, it's fucking
Rally.
shot up. So now I'm starting to think, oh, right, what's it playing at? But I've put a fib on it. It's bouncing off the 50 off the fib that I think it's bouncing off. But it's not giving me any entry. So that's telling me I just got to stay out of it and wait.
But that's the other side of it. If in doubt, stay out. Now, when you have a strong directional drive like last night, and this is again, it's news trading and fallout of news trading. If a market moves in a singular direction, for whatever reason, and it doesn't matter whether you get positive or negative news, the market will do what it wants. I've seen real good figures in the markets tank. I've seen bad figures in the markets rally. But what does happen, and this always happens on a regular basis, certainly 80% of the time, you're going to have people taking profits. you're going to have opposing positions, and you're going to have people that are wrong. Right? So they're the three elements. Now, when they're wrong, the stops and everything are getting hit and firing around. You've got people taking profits, which is short-term retracements, and then you've got opposing positions. So what happens is the market will naturally retrace to about 50%. So that's kind of where a fib rule comes in. So if you see a straight move, I don't mean just like grinding move, because they can't give any data, but if it's a strong, I mean real strong move, and you can find the bottom and top, how many times does that come back to pretty darn close to that 50%? A hell of a lot. So you can build a structure from that. You'll always see the start. Finding the end is a little bit more difficult, but you'll always see the start of it. And I'm talking hourly candles here, certainly not less than 15 minutes. And you can find the top when you see it start to roll over or congeal a little bit. As long as it doesn't break that top, your framework is, right, at 23 I can enter, and I want to be risk-free or out by 38. That, it's not the biggest trade in the world, but it's safe. Then if you want to hold the trade, you're pushing to that 50% because you know roughly where it's going to go. So that's like one criteria. You know, and it's giving you an entry, it's giving you an exit, and your stop is just the other side of the zero. Now, the other one is, well, once it comes to that 50, if it stays, let's for argument's sake say the market was moving up and it rallied, push, big candle, bit of consolidation, hasn't got any higher, then started retracing on itself. Well, there's your 23 out at 38. So that's a short-term short in the face of a long drive. So your target is relatively small because you're going against the grain. If the price holds above that 50, there's a high probability that trend is going to continue. So you watch it come back to zero. And if it goes back to where it came from, it's going to break and continue in the direction of the trend. So your next target would naturally be 127. So that fib from that one move can help you plan out, and it can bring structure to what you're looking at. And then if you're looking at patterns in one thing and another, that is your pattern. The drive, the framework, and then logical targets.
So if you're doing a Kylie, is the bias sheet still in play?
Yeah. Because that'll tell you what the dominant direction is. So
Okay.
if the dominant direction's sort of saying, right, the general market is to the long side, and your double D saying it's long,
yeah,
there's nothing wrong with going against it, as long as you understand that you are going against it. So you take common sense approach, and this is what I talk about all the time, and what I try to talk about. Maybe I get it across wrong, I don't know. But if you're going against the grain, just be very aware that's what you're doing. So the way around it is you can size down. So if you would normally go in at £1, go in at 50 pence or whatever. Because if you're wrong, you don't want it to hurt you.
Yeah.
Because the bigger trend is going the opposite way. And if you're on the wrong side of it, you're either going to have to manipulate your account. Shit, I know I'm right to a degree, so you're going to have to sort of put extra money in it just to cover any margin call or anything like that if you want to hold. Or you're just going to have to take the medicine and kill the thing off. You know?
So if I've got a sheet that says it's a C or a D trade in the correct direction, and there's a Kylie in play, is it still tradable? I mean, I know I see you do it, but I would probably step back.
I wouldn't touch a D with a book.
Yeah.
A C, I would. By definition, it's a scalp.
Yeah.
And the idea is you just get in and get out. So the way I kind of look at it is, if a normal trade is 10 pips, I'll half it. I'll go in for 5, and I'll be happy with 5. As long as I can see the criteria is pretty darn good. You know, in this case, a pullback on a strong directional drive, you can put your fib on, and the reason it gets called Kylie is because you're looking for the 50%, and Kylie Minogue's like a 50% person because she's only little, right? Kylie.
Bristol don't get that one.
Just one of them little things. So you get in and you get out and you're happy. If you're going to go with the trend, then that's when you can start doing, it's a little bit what Lee was talking about the other day, and it's something that I'm an advocate of. I think it's a really good thing. Instead of opening one trade, you open two. You have a set target of whatever you choose, 10 pips, 20 pips, whatever. Once that's hit and your first trade shuts off, just let the second one go, but pull the stop to break even. Just one pip over break even, so you can't lose any money. And then either have a target with it or a time target. So, right, I'm going to hold this till 4:00 when the cash market shuts or whatever, or I'm going to hold it to the end of the hour. And that's a good way of doing things if you're going with the trend.
Yeah.
If you're going against the trend, not so much.
Do you think Bitcoin still plays by these rules?
I don't think. I'll be honest with you. I've got no idea what fucking Bitcoin does.
All over the place, isn't it?
The way I look at Bitcoin is this: during the week, Monday through Friday, I wouldn't even look at it. Saturday and Sunday, I'm still very wary of it, but its costs are cheap, and it moves reasonably well. That if I was compelled to go to the market, like when sort of goaded into doing it, that's the only market I would look at, just simply because it can move. But I follow a scalping kind of mindset to it, in the sense of I ain't going to outstay it. I'll get in and I'll get out. Because if I'm wrong with that thing,
You're fucked, aren't you?
yeah. See that, boys and girls? I've taught him to swear.
Good job you said that disclaimer this morning.
But yeah, I find Bitcoin. I'm not a lover of cryptocurrencies. I'll be honest, but that's more a personal thing than a technical thing. It's just I don't understand them. So I'm like everything else. I kind of know what gold will do. I know what cable will do, for no other reason that I've got lots of historical data. And my theory is I ain't in the room when decisions are made. So I've got no idea what's pushing or pulling that market. None. But what I can see is what it's done in the past. And I do know that from those past data points, they repeat. And that's all markets ever do. They go from this level to that level. Think about it. They might go back to the other one. And as long as I know that, I've just got to find out what direction the train's going in, and then find some way of getting on board. And that's why the zones are there for GoldenEye. They're just checkpoints. Right, it's a red zone, it's a main bus station or main train station. I'll get on. And the green one's just a substation. Because it's not going to turn, not really. It'll try and go up to the next red one. And I keep it as simple as that. And ultimately, it's all lovely to sort of try and manipulate and talk about what a market's going to do. But us mere mortals don't know. You know, and that's the thing. It's why, maybe it's why some people sort of kick off, because they're looking for that. You've got to be the market wizard. You've got to know all the numbers. You've got to see this. And like, it's not going to affect the next 10 minutes. All that's going to affect the next 10 minutes is whether that's going to move up 20 pips or not. And the way that I do it is I just put my ducks in a row. Look for strength, look for momentum, look for general direction, and then see if there's some kind of sort of synergy across multiple time frames. And if it is, well, you just go with the odds.
If it fails the 50, Scruff, it's about 80%, isn't it, that go to the 127?
Yes.
Yeah.
It'll come to the 50 from a strong directional drive. 80% of the time it'll move. It'll have a good go at going at the 50. If it breaks through it, there's a high probability it'll go to the 61. If it gets through the 61 and it stays there for quite a while, and it just jostles around, doesn't try to go back to 50, it just jostles about, there's a good probability that that might be a reversal in the market and it'll go back to the lower point. But until it breaks the 0 or the 100, it's classed as a retracement on the general trend. Soon as it breaks one of them,
can you narrow down what quiet time is? You say quiet time, yeah.
In what sense?
Well, you say it hovers there for quite a time. Are you talking like on an hourly chart?
Oh, yeah. So say you're looking at an hourly chart.
Yeah.
And, well, even a 15-minute chart, for argument's sake.
Yeah.
I'm not talking like it hovers there for a candle. It's like stays there for 4 or 5 candles.
Yeah.
And you can actually see it's almost range and it's struggling. And the theory behind it is, well, if it's struggling to get higher, then there's something going on. You know, I'm assuming it was going long at this point. So if it's struggling to push back up, that means the buyer's energy or whatever was there is gone. Now, they either have to take a breath, relax, and then see. But a lot of the time you can start seeing in the general direction, because at that time, your MACD's probably caught up. Your Bollinger Band will have probably collapsed in on itself as well. And you're looking for the new reset. Now, that new reset would be a break of those candles. And that's kind of why I count candles back. Because what I'm looking for is the breaking point. Now, if it's on a triangle, a fractal of sorts, well, in order for that fractal to come into play, it has to break the high of it. So that's 1, 2, 3, 4, 5. So it's your starting candle, a rolling 15-minute through 3 candles, and then one just on the other side of it. And you can kind of see what's going on. If it breaks through, well, fine. But it also has enough candles to show you a range, or a small range. And it's the same principle. Is it going to break the range? And that's what I mean by some bit of time. It's so you can see some candles print and you can sort of think, well, what are these doing? Now, if it's sort of an hourly candle, for argument's sake, you can start moving into the DNA of what the chart is. So you see 4 hourly candles. So that's 4 hours of data. But it hasn't really gone anywhere. But you can then go, right, okay, well, each one of them has 4 15-minute candles in it. So let's have a look, see what the 15 is doing. And then what you're actually doing is you're color counting. So when you drop it down, you see, is the majority of them red or is the majority of them green? So you can start seeing who's almost winning inside the range. And then you go, right, okay, well, the greens are starting to come in because there's a couple of deep reds, but the greens are pretty much the dominant color. Well, every one of them 15 minutes has 3 5-minutes in it. So let's delve deeper into it. And then you go into your 5 minutes and you do the same thing. But when you're on the 5 minutes, because you can see like a red 15-minute candle, what if it was only one 5-minute red candle? That could be just one order coming into it. But if you saw 2 red and 1 green, well, it's showing you there's more than 1 orders going in. There's a dominance. So you're building up a picture as you go down to it. And once you've got that in your mind, you can go, right, okay, I think the dominancy is probably to the downside. Let's see it play out. And I want to see it break extensively to the downside. And then you would draw a fib on your 15-minute chart and then just go, right, I'm looking for sells. And when it hits that level, I'm just going to sell it. And then where am I going to take it? I'm going to take it into the next dominant level, which is either weekly, daily, monthly, or a key fib. And then you just target into that and do the process again. So it's all about building. Everything we do is about building up a picture. But that picture is telling you a story of, is it buying or is it selling? And then once you've got that narrative, stick with it. And then you can use your RSI. The RSI is a good one for this, actually. The RSI, because it's the momentum, not so much the strength, it's a good way of judging to get into the market. Right, it's I want to sell it. Where's it at? Well, it's high in the range. Right, I either need to see it go extreme and come back, or I need to see it break that 50. And you just use that as a checkpoint. And if it's done it, well, your checkpoint's already in place. Just put a pending order on the level and away you go. And then once you're in the market, that's where the money's made. Because you sort of go, right, I know where I'm getting out, because there's the key level I'm effectively targeting to. So it's either your money amount, your pip amount, or that level. Whichever one comes first, you're going to be happy. And then the other side of it is, where am I wrong? There's a swing, there's a key level. I'll DC you up into that level. And then if I goes through that level, well, I'm wrong. And then just ask yourself questions all the time. Is it worth it? Can I afford it? You know, and as long as you're answering simple questions like this all the time, the job becomes relatively easy. It comes hard when you try to catch every move. You only need 1 or 2 a day, and you'll be fine. Silence.
One of the
coming, you know.
One of the trades yesterday, that was the exact my entry rules said no. So I didn't trade, but the trade would have won if I'd got in. But because the entry said no, you just leave it.
Never worry about what could have been.
Yeah, that's what I was trying to say. So I think it was pound yen yesterday. 2 trades in the morning. One, my last one said the rule said no, but it did go to win. But I just thought, you know what, it doesn't matter.
Exactly.
It's a win on your mindset.
Yeah,
everything is mindset. I know when people are sort of newer to this, they think it's the super system and one thing that you could actually enter on a flick of a coin, to be honest. You could just go to the market and go, well, I'm buying today. That's it. I don't care what directions is, I'm buying. There's a kid, used to be around all the time. Well, I'm saying a kid, bloke. You know, you often see him on UK spread bet. And he only ever bought the FTSE. Didn't matter what the FTSE was doing, he only ever bought it. But if you look at any chart, and we've done it, you can have a direction in your head that you will only go long, and then you just wait for it. And then you just target appropriately. So is that a mindset thing, or is that a strategy thing? No?
bit of both, isn't it?
Yeah.
Yeah,
Mindset.
Probably more mindset.
I would say it's mindset. And the reason why I would lean that way is because you've got to be disciplined to wait. You know, and if you've got that, then your mindset's in the right place. And you'll do quite well. And the ultimate thing is as long as you're not greedy and you just plod along, as we've seen many, many times, it all just adds up over and over. And once those have added up, how do you make it bigger? Increase your position size. You know, so you could do that. You could say, right, instead of trying to compound an account 10% or 30% or whatever it is, go, well, my position size is 10p. I'm starting at 10p. I might be able to put a pound on, but that don't matter. Why max it out? Start at 10 pence. Win 3 trades, but there have to be 3 in a row. 1, 2, 3. Then you increase that 10 pence by 10% or 5%. And then it edges up a little bit. 3 more trades. And then you edge it up a little bit. And then before you know it, you've disciplined yourself into doing that. But you're also creating sort of mind muscle memory that you're not having a shock to the system over and over. That because one of the fatal mistakes is you go in at a 5 or a point to start with. And it's great when you win. But when you lose, it's like, oh, don't like that. Don't like that. That's a lot of money. Oh, don't like that. Because you're not used to it. But if you started small and then just build it up ever so gently, you'll probably get to your 5er within a couple of months. But your mind is so much calmer. And then you just continue the process till you get to a point where you find it's quite painful. That could be £10 a point. Because let's be honest, if it goes against you at 10 quid a point, the figures start racking up a little bit. but you build up. And once you feel uncomfortable at that point, you stop and you stay at that level till you feel comfortable. And then you start building it up a little bit again. So it's all mindset.
Yeah.
Because you make mistakes when you're frightened, you make mistakes when you're stressed. And like I said, you've heard me say a few times, like my grand's quote, money will see you out. And if you're stressed with money, having a big position on is really going to fucking hurt. So trade small and be happy with what you get.
Split your position. Honest, it works brilliant for me.
One of the reasons I do split my position. If you're looking at, well, let's take 10 quid a point just as a quick figure. If you split that by 5, that goes down to £2 a position. You can open up 5 positions at the same time. And if that goes a bit Pete Tong, yeah, the main sort of total balance could be 100 quid against you. But if you've got it broken up and you're looking at positions individually, it's not that bad. You know, it kind of frames it, but it also gives you the opportunity to switch them on and off without trying to do mathematical gymnastics. Silence. Santa's coming. You should all be happy. I'm looking forward to Santa Claus. I really is.
You sort of answered my question about setting my stall out for the new year, actually, because I've been stuck at 10 pence a point. So I'll just up it a bit, I think.
Yeah, but try to earn the right to up it. Are you any of you doing like a small challenge this year from January? Like building up a couple £100 or whatever?
Yeah, I watched your video last night, actually, Scruff, so I was going to put that on my list of to-dos today.
Result.
Yeah, well done, Simon, by the way. I watched the
cheers.
beginning of that as well. Yeah.
I can't tell you how proud I was yesterday. I really was. Finney and Simon, to get one is wonderful, but 2 within a couple of hours of each other is just, it was like winning the lottery yesterday.
But it just shows it works, doesn't it? And hopefully it will be, served to show to some newer members that the process works and just knuckle down and follow it.
Yeah.
Did you just use the golden eye strategy then, or did you use things like the river as well, Simon?
No, when I knuckled down, it was predominantly golden eye.
Yeah.
I mean, you can use golden eye itself, even on a longer term, because the principle is always the same. If you're looking at, say, the river, just for argument's sake, the way you mark your charts up is identical, because those levels, it don't matter whether it's a daily chart or a minute chart, they're identical right through. So you can look at your river for your criteria to get into the market. Then once you're in the market using that criteria, you can drop it down onto a 4-hour chart or even an hour chart with your golden eye zones, and then just use them as your target points. Because golden eye is just a big framework of mapping out a chart. It's ultimately what it is. So that's the beauty of it. You can mix and match. You can say, well, I only take a 10 and a 20 moving average cross. There's nothing wrong with that. It's quite respectable way of looking into the market. You can do your due diligence. I've got a direction in place, and I've done that through the buyer sheet. So I'm only looking for longs today for whatever reason. I've got my golden eye set out, and my entry point, if you don't want to use level, I prefer to use levels, whether that's like a short-term fib or whatever it is. That's roughly my area of interest. But you could say on this moving average cross, when that crosses, I buy. And where am I targeting? Whatever that golden eye zone is, or whatever the next one is. So it creates a framework for you. Now on the river, it's the same principle. I've got my double entry cross. Where do I want to target? Well, I'm going to target into these. How am I going to do it? I'm going to rack and stack this thing. So I'm going to open up multiple trades at the same time. So say you're on a pounder point, I'm going to open up 10 positions of 10p. All at the same time. And then what I'm going to do is I'm going to put a target on every single stall point and then let it play out and then decide which one is your nominal one to pull the stop in. So you could say, right, I'm going to hit the bottom of the green, I'm going to hit the top of the green, and I'm going to hit the red. As soon as I've hit that red, I'm pulling all them stops into. But you've already been paid 3 times. And then that's a framework. So you're using GoldenEye on top of something else. And it's showing you where to target effectively, rather than living on a prayer. So there's loads of things you can do, guys. It's why this job is quite fascinating at times, because there's no one fits all. It all comes back to this.
I was just going to say, who pulls their stopping quick? Because I'm a big believer. I want my stop to break even.
Yeah.
Because there's nothing I find, because I'm not really huge on mindset, apart from when I'm losing. That's a fucking twat. But everything else, obviously mindset doesn't even come into it. It's a business, it's a job, just get on with it. But when you're losing, it comes in. So I found quickly that on fast markets, I'd rather have my stop to break even as quickly as possible. I'm not talking 3 or 4 pips. I'm talking, if it gets to 10, 12 pips, right, get me stop to break even, because I tell you what, that feeling of losing money and being in the red, I'd rather have me stops break even.
No,
Does that make sense?
No, it definitely does. You often see me sort of, if I see a market reversing on itself, I'll take the money back out the market because I know it's going to go red. I can see it. You know, it's starting to come right the way down. And if you're like a pound off, it's going to go into where you started. Just kill the trade off.
Yeah.
What's the worst thing you can do? Re-enter the market. You know, all you do is you just go, right, the market's come back down to where you started. So it's going to go negative anyway. So just kill it. You can put your order above that candle, if that's what you want, and then follow that candle down. And then it'll come back and take you back in. And it might actually get you at a better price. Rather than let it go negative and then go, please come back. Come on, come back, you bastard. And then inevitably it bloody doesn't. So
see, I find it difficult when I get close to my take profit of looking at the chart sometimes, and I think it's not going to go up much further. It's where it's, and I should take my money. And several times I know I should have taken it.
yeah,
I've just left it a few seconds more, and it's come back.
Yeah.
I'm so close to take profit.
If there's a couple of old sort of chats within it. It's you take the money when it's first offered in day trading is a big one. So if you see a surging candle and it goes and there's like 40, 50 quid on the table, you think, oh, that's pretty darn good, that. We'll have that. But then step off. Right? Because if you go back to market, you might be going back at top of market. So you need to step away when you see it surge. But the other thing, and it's where sort of the zones and everything come from, the markets inevitably are a living, breathing thing, and they're not pit perfect. We can get it as best we can, but they're not pit perfect. But if you have a zone, say the red zone, just for argument's sake, and it's pushing up and your take profit was, say, the level, who's to say as soon as you go in that zone, you don't just kill?
Yeah, be happy with any profit.
Yeah, because the other sort of thing people talk about, I'd rather have 90% of a winner than 100% of a loser. And you just go, right, yeah, it's up there, it's at 950. I know I want a tenner. Is it really worth it? When I can see it sort of going, yeah, bollocks. Yeah. Right, I've just banked 950. Happy days. Gonna have a cup of tea, and then I'll see what 11 o'clock brings.
Yeah.
And it's 11 o'clock, and like what Lee said earlier on, well, I looked at it. I've done all right on the first two, but my criteria is not quite there here. No, I'll not take it. And if it ran up and hit your target, so what? You made a logical choice. To me, that's trading.
I find myself snatching at the profits. I mean, Lee's talking about getting to 10 pips. If it gets 10 pips, I'm quite happy with that, and I'll be out. ungrateful. I think
Yeah,
I need
but
to
then
work on that.
but then there's a target, isn't it? Like what Gary said.
Yeah.
I'm a huge, without levels I couldn't trade. I'm telling you now. So my levels and then the golden eye, if it's to the 38 at first on golden eye, and that's 15 pips, that's where I'm going.
Mm.
Does that make sense?
Yeah, and I have my target.
So then I take my first trade I've put on, 'cause I've split my two. My first one is my wage. I've got money. I'm happy. Second one, is it going to go to the 50? Then I manage the second one. The only problem is what I have been doing with the second one. I said I wasn't going to do it. I was going to let it run because it's a break even. But now I'm starting to close it off when it's coming back and there's 6 pips. I'm thinking, do you know what? I'd rather have 6 pips than. But then sometimes when I close it at 6 pips, the fucking thing turns around and goes right to the top of the level for 30 pips.
Yeah.
So I haven't made my mind up how to tackle that yet. It's the second trade, whether just to let it run or do you just manage it to your own, how you're feeling. I don't know.
And I'm like that with my first position.
I mean,
if it starts to turn round and I've got 6 pips, I go, yeah, okay, I'll have that.
You don't use Madness, Lee, do you?
No.
Is that right now?
Here's a simple question for you. How many pips a day do you think you need?
Well, that depends.
I try and target 20 pips at the moment.
So we've got just on 20.
Depends on the size of your account.
Yeah, it depends on what you're putting on, doesn't it?
Does it?
10 to 20, I'd say.
You're putting £10 a pip on.
No, we talk.
But my theory is if I can get 20 consistently, then I can up the amount I put on. So to get the money that I want.
Mm-hmm.
So if I'm just trying to be consistent and say I can every day do 20 pips on average, and then I can put £10 a point on.
Correct.
That's the way I look at it, yeah.
Because if you look at it, there's the big debate about compounding accounts and percentage increases, etc., etc., etc. When you've got a small account and you put 50p on and you want to grow 200 by 20%, you only need £2 a day. So that's essentially 4 pips. Right? So you could easily hit your money amount very quickly. But what is that 50p against the 200? It's massively over leveraged. Okay, it's way too big for the account, even though you're hitting your money amount very quick. Now, if you did the same principle on a huge account and it's wrong, you're looking at thousands, not a couple of quid. Your mindset collapses. So if you can work on a basic pip count, what you're comfortable with, in theory, Justin's kind of right in what he's saying. If you are consistently looking at the markets objectively without the money side inside it, I can go to market pretty much every day on the DAX and find 20 pips. Right. You've now got a benchmark to figure out what your salary is. So and you've heard my analogy of the 48 weeks. I work 48 weeks of the year, which allows me to have a month to be wrong and a bit of time off. 30,000 across the 48 weeks is approximately 600 quid a week, give or take. Okay. Well, Monday is a terrible day to trade. Friday is a terrible day to trade. So you've only really got 3 solid trading days. Well, if you're on a £5 a point and you do 20 pips, that's 100 quid. So I have to do it twice. Or I increase the £5 to a tenner. And then that'll give me 200 quid. 200 across 3 days, 600 quid. That's 600 quid across 48, it's 30 grand. So it's working it backwards from a bigger figure down into something that I think is tangible. Now 20 pips is about right, because you can go into market on the DAX and find 20 pips. If you find that difficult, look at a market that will safely give you, say, 10 pips. It becomes a problem when you try to trade more than that. So if you target yourself 10 pips to get X salary at the end of the year, but you're constantly going, right, I've got my 10 pips, I'm going to go back to market again to do another 10, 20, 30 pips. is that following a process or is that just chasing the money? Do you get where I'm going with that?
Yeah.
Now, the other side of it is you go, right, so you've set your benchmark out at 20 pips. They're what your cut-off points are. Now, what Lee was talking about earlier on is where this adds to it to give your bonus. So your 20 pips is your salary. What if you can split your position in half? Because you've started comfortable and you can up your position size a little bit. And you have one that closes at 20 pips, which will pay you what you need. And you let the other one run. Then your money amount naturally starts increasing, and that's kind of in the industry they call it premium gains, or if you're in a workplace they would call it your bonus. It's all about your planning. Everything is planning. Doesn't matter what you do, you plan it. Santa Claus is coming, boys and girls. Did I tell you Santa Claus?
This time next year.
This time next year, Rob.
That's right, Dale.
So Lee, did you go into gold? I've got it up on the other screen.
No, it's broke. It's still that 50%, and to be honest, it's fucking slow. I think.
Oh, mine's going right up to the 61.8 on the
Yeah,
Fibonacci.
it's not far. It's not far off the 61. So that's just throwing my direction. Just that's telling me just to leave it now.
Yeah.
No, I'm not going to bother with it.
So your main direction was down, was it?
Mine was down till I
Right.
seen what happened earlier. I was this morning. It went fucking shooting up.
Yeah, it was heavily outside of the Bollinger Band on the hourly.
Yeah.
It crashed through two major fibs, but it had come to a daily level and stopped dead.
Yeah.
Stopped dead at that point. Now, when you looked at that level, it was almost, it couldn't get any further down on the RSI. It was literally very rarely you see it that low. On mine, it was just above zero. So it virtually never gets there. The Bollinger Band was also closing in at that point. So the chances of that daily level holding was incredibly high. And where would it go? Well, I can kind of show you. Give us a second.
I think it's quite good that most of us have got that daily level in the right place.
Just pull this in. Right. Let me just pull this into the middle. So this is the hourly chart, which is what I think you were talking about.
Yep.
Let me just move your heads a second. There we are. So it shot down, stopped dead on here, pretty much. Straight above, yeah, it's flaring, but look at that. It's very rarely it'll get that low. So the chances of that holding was pretty darn high. Now, if you step this out as well, the 4 hours in exactly the same place. And it was starting to cripple at the top. Okay, so this is like +1, -1, if you like. Go back to this. So to try and sell in and around this area would have been pretty much suicide.
Yeah.
So what you do, you rely on sort of your Kylies, your fibs. Well, where did this move pretty much start? Well, it pretty much started up here, didn't it? There's your compression across that range.
Yeah.
It broke to the downside here, came down, stopped on the key levels as normal. So if you're going to drop your fib in, well, that's where it started roughly. Now you can see the bottom, whoosh, straight up, hovered around this. Catch you in a minute, kid. Hovered around this, but look, straight onto the 50. And then it had a bit of a think about it. If it's going to push up to the 61, what's there? Key monthly fib. So it could have a hard time here, but the Bollinger's collapsing in, telling you all of that pressure has run out. This is moving up higher. It's still got room to go higher. So the testing point is going to be here, in and around this. So if you follow just a basic trend line point of view, that's roughly where it's going. So just put that to the edge of there. We can see where that intersection, this is coming down heavily this way, and this is just basic stuff. Well, there's your intersection up here. So yeah, this area is probably the next stalling point. So it'll push into this and then have a good attacker in and around this area because it'll have run out of steam. And then if you look at it, that's marrying up to there and that's marrying up to there. So simple stuff. So if I was buying, I'll be targeting that. But would I buy it at this point? Let's have a little look. Probably not. But if I am, it would be here, because now look, that's gone down. The buyers have taken back in control. We've got space, but the general direction is down. There is no strength left in it. It's flattened out. So again, if that pushes up, that's it's going to be its bounce point. And it'll bounce off that and it'll come back on itself before it has another run up there. Now, this is the thing going back to sort of Hollywood's question about sort of profits, and you're a bit worried. Well, if that pushed up and it's stalling in and around this area, just take your money, because you can see the little changes that's coming into the market. Does that make sense, guys? Just kind of just looking at a picture and building up some form of narrative to it. But keep an eye on it this morning and see if it stops in and around this area. Because
I think it will. But then again, I'm not going to trade it. Not now.
Yeah. But it's like everything else. And then on the pound today, you've got to remember that there's big news in a couple of hours. It's also Christmas, and this week is a nightmare to trade. It really is. It's why I don't do very much. And it's for no other reason than I've been stung in the past. You know, and you learn by what hurts you, not by what, well, some people sort of want it all fluffy. Every lesson I've learned in life has fucking kicked me in the teeth.
Yep. Well, I've certainly had a hammering this week. And I had a lot to think about. But we all say, don't we, oh yeah, we're going to learn from our mistakes. But actually, how long does it take before you really start to learn?
Yeah.
As opposed to just saying you're going to learn.
Well, my biggest lesson was well, I've told you the story about when the DAX kicked me into the middle of next week, sort of thing. Yeah. That was the best lesson I ever learned. You know, because it showed me that no matter how good you are, if you let arrogance take over and sort of I'm better than this, it'll win every time. Every time. So, fine. I'm happy with the crumbs that the big boys leave behind. And that's it. As long as I get fed, I'm not bothered.
Yeah, I mean, I've found this week my ego's got in the way.
That's one of the hardest things to work, and it's certainly for a guy. Yeah, you know, because we don't like to be told we're wrong, do we?
No.
You know, not a lot of the time, anyway.
I'm never wrong.
I'm just.
I mean, you ask Winky. I mean, I'm wrong all the time in her eyes, but I never admit to it. But no, it is, and once you start taking all of that out of the equation, it's kind of why I went sort of saying, what's your pip count as opposed to your money? You should have a money amount in your head, but it's got to be realistic. If you're on a pound a point and you want 200 quid a day, the chances of you doing 200 pips is pretty slim. You know, you can do it, but can you do it every day long term? Probably not. But could you do 20 pips long term every day? Yeah. And you might do it in a way that you go, I can safely do 5 pips. Well, I'll do 5 pips this hour. I'll do 5 pips the next hour, 5 pips the hour after that. But when I've hit 20 pips, I quit. And you are exactly right, kid. Rain's just put something up. Being wrong is the best way to learn. It is. because sometimes you don't know you're doing it right till you actually do something wrong, and then you think, shit. Yeah.
That's why the small account's good, isn't it?
I love the small accounts. I think that it's the best tool that we use. And to take 200 quid up into 1,000 quid, and like I have, and what did I do? I went on holiday with it. To me, that's just a freebie. I can't wait. You know, I love it. I'm going to do it again and have a holiday in February in a lodge.
Have you never thought about going to the next stage then? Taking that £200 to 1,000 and take the 1,000 further?
Yeah. That's the whole general idea of it.
Because I know you keep resetting it, but I'm just thinking if you can get to the 1,000, why don't you just take that 1,000 now and do what you just done with the 200?
Well,
or does that?
That's the whole thing. But the reason I've reset it is simply because we've got newer guys coming in, and it's to encourage people to do it. But no, there's nothing wrong with that. It's just I want to follow the same path as you guys. It's all well and good putting a 20 grand account on and going, right, okay, get off we go, and you're looking at your 200 quid and it's like, I can't keep up with that. You know, and sort of like when you put your rags and riches. I mean, I had a conversation with Steph a while ago about this, and he doesn't look at the rags and riches, or he wouldn't look at the rags and riches, simply because he felt he was inadequate to some of the bigger figures. And I was like, no, you're not. I've looked at your account. You're doing incredibly well. Your pip count is higher than what most of them are. So you should never be frightened of it. But I can see roughly what he was driving at. Well, making £300 and I'm making £30. Yeah, but your £30 is excellent. It's all in relation to what you've got. You know, if you've got a corner shop, you're not exactly Sainsbury's, but you be very proud of your corner shop. You know, so, but no, there's nothing wrong with that. And that's the that can be the challenge. Say, okay, we taking our £200 and we're going to take it to 5. And then when we get to 5, we're going to see what 5 can get us to 1,000, and then 1,000 to 15, and so forth. And just do it slowly. But I think the main crux of it all is try to not build Rome in a day.
Yeah.
You know, if it takes you, I don't know, say it takes you 2 years to build 10,000 quid. Tell me a bank that would do that. There ain't one. You know?
I think where I trip up, maybe other people, this will chime with it, is I look at my account size, look at when I am getting a period of steady gains and think, oh, I'm underperforming. And that's where it all goes pear-shaped for a bit.
Okay. Well, we'll look at it from another point of view. Why do you feel that you're underperforming? Have you made money more than £1?
Yes. Yeah.
Then you're not underperforming.
No, but I mean, when I make the account's taking a dent, it's not terminal, but pause for thought.
I mean, how much would you... Simon, was it you that said about Bitcoin it would take you 128 years to make...
Yeah, it's about 106. I put 10 pence in and got £9.97 out just by moving. As soon as I got into profit, I just moved the stop more as a sort of like an exercise, more of a laugh at the weekend. And when I Googled it, it was 106 years for a bank to give me that return on 10 pence. So, yeah.
So that's kind of what I'm driving at. You can have a lot of money in a bank account, a lot of money. And if you can outperform that on a daily basis, even if like the bank gives you 20p and you do £1.50, even if you've got 50 grand in your bank account, you know, but you do £1.50 a day, you've outperformed that bank. So that 50 grand has worked for you. And again, it's an ego thing, isn't it?
Yeah.
You think the 50 grand should be doing 5 grand a day. No, if it does 200 quid a day, amazing, because nobody else will give you that.
Yeah, I think that's the key. That kind of comes down to mindset as well, doesn't it?
Yeah. I think everything's mindset. everything we do is mindset.
But also, if you're on a small account, if you make £5, if you withdraw that £5 and buy a sandwich, you're streets ahead of most of the traders that ever give it a go, because they never realize anything with anything.
Yeah.
That raises a good question here. How many of you hold all of your money in the broker?
No, I only hold what I need. Like you said, Scruff, I only hold what I need to trade. So I do still have like cash in the bank.
Yeah, super, because that's what I do. It's what the Vanguard is for me. My Vanguard is really a slush fund for my trading account. If I need to, for whatever reasons, I had a bad day and I need to put some money into an account, that's where it comes from. And I've got another one for my wages as well. I only hold in the trading account, or the broker rather, what I need to open up the margins. The rest of it is in a bank account, and there is reason behind it. Why do you think I might split it? There's a couple of reasons why.
You're not covered by the FSA rules, probably.
Well,
that's one, isn't it? Yeah.
Yeah. If the broker goes tits up, you can get your money back to 85,000 or whatever it is these days, but it's a long, lengthy process. So there's that element to it. But the other is the human element of, I've got it, so therefore I'll use it. Now, if you're sort of wrong, that can be really dangerous. Because you'll start going, fuck it, I'll use it. Oh shit, I've lost a lot.
Yeah.
Whereas if it's going a bit tits up and a bit pear-shaped, you physically got to go to the bank or log into your bank account. Arrange for and I know it can be done electronically pretty quick, but you've still got to go through the process of putting money into the brokerage account. Now, one of the things that I like with IG is it takes it about 2.5 hours to fund. So it really slows you down. BlackBull, you could do it, well, it's pretty much instant, to be honest, if you use a debit card. But there's a lot of them have like a time delay. It's normally a couple of hours. That couple of hours can make you sort of think about, should I really be doing this?
So if you had a £5,000 bank, then what would you expect to have in your broker then?
If I started with £5,000, well, I'd be looking at £5 a point, so maybe £2,000 of it.
Right.
A couple of grand.
But that's with, there's two different brokers there, because BlackBull will let you do that, whereas IG won't.
Correct.
That's what I was about to say. So I was a little bit naughty on BlackBull because my account's about £2.5 grand.
Yeah.
And I was putting £3-4 on because BlackBull will let us.
That's leverage.
But I have a £5,000 account, but all my £5,000 isn't in that account yet.
Yes. Well, so
my mindset was saying I've got the money, but then I'm also on the flip side, I'm probably being a bit naughty by thinking, Does that make sense?
It does, and that's kind of where some of the other rules come into place, like sort of my money rules on position. And always remember, just because you can doesn't mean to say you should. But if you're on £1 a point, and that £1 a point has come from a £1 a 1,000 ratio, so for every £1,000 of liquid money I have, the maximum position size is £1. So if you've got 5,000, your maximum position size is £5. That doesn't mean to say you've got to put a fiver into the market. It just means you can't have any more than £5 in the market. So if you open up two, sort of a position on DAX and a position on pound yen, well, essentially you've really got £2.50 on between them. You know, one can have 250, the other can have 250, because collectively it's a fiver, or 4 on one, pound on the other. What you can't do is say, well, I know I'm £5 a point. I've opened up a fiver on the DAX and I'm opening up a fiver on pound yen, because then you've maxed your account out and then doubled it.
Yeah.
And the reason behind that is, I see all this mathematical gymnasts of, well, you do 1.5% of this or 2% of that and one thing. My head, By the time I've worked it out, the bloody trade will be done. So if I've got that in my head, well, I know it's a pound. Do I think it's worth putting in a pound? Yeah, it's a B trade. It's pretty good. I'll flatten it out. Is it shit? Well, it's a C trade. I'll maybe put 50 pence in because I think it's okay, but I don't want to get skinned alive if I'm wrong. And it's like that. And then if you just do your little steady steps every day, suddenly you find that you've gone quite a journey. You know, you get 6 months into sort of 10 quid a day. I bet you've got a decent pot.
I think one thing I'm going to start doing in January is if I make a daily profit, I'm going to put it in the account wallet.
Yeah, that's a good way. I half mine. Kind of try to show you that process as well. It's basically I run it as a business. So half of it, the profit belongs to the business to reinvest. And the other half is for my efforts of getting it there in the first place. And if there's £200, well, 100 of it's mine and 100 of it's for the account. And then at the end of the year, sort of like what I'll be doing this week, because that little black bull I started, I've got about 70 quid in there now. I want to take that 70 quid out and I'm going to have a nice meal with it. So I'll buy you a beer on Ocean Road, Lee. So, actually, does Ocean Road still have good curry houses? South Shield?
There's fucking loads, isn't there? It's all fish and chip shops and Indians down there, mate.
I know, but that's what I'm after.
There's
I haven't
loads.
been to a decent Indian for ages.
There was a really nice one in Chester, but they got busted because they had.
Dog.
You don't know we got Hollywood in here, don't you?
I'll say she in the fridge.
They had.
That'd be modern slavery then.
They didn't have any visas for the stuff.
Yeah.
I am absolutely
But
shocked.
the owners were lovely. The food was lovely. They couldn't have been the nicest people. But yeah, twats got busted.
You know.
They do everywhere.
Yeah. The one I used to always go to the one in Clearpith at the Rashpooth. Remember that one? Used to go in the Rashpooth all the time, but similar sort of thing. But it's not there anymore, and it's terrible. And there was the capital was the one up above it, and that was terrible. But I just fancy going for a decent Indian over the Christmas period. And there's none where I live. So, and Perry mentioned it the other week about Ocean Road and the curry houses, and I thought, Jesus Christ, I haven't been there for years. So there we go. Okay then, kids. Well, remember, it's big news at 12 o'clock, so be very careful of the pound. Other than that, just toddle along. Tomorrow will be a nightmare. It's last Friday before Christmas. It'll be hard going, harder than normal. So if you are in the markets, just be really careful. Okay, and just think about little steps. But we'll try and catch up. I don't know what we said it was going to be, Monday or Sunday. I haven't looked at it yet. But we'll have a little bit of a tipple and wish each other Merry Christmas, all that bollocks.
Is that
with
date
what
in
you'll
Darlington
actually put some
confirmed?
thoughts on. Go on.
Right, guys, I need to go and walk this dog. I can hear him fucking twisting.
Okay, kids. Have yourselves
Have a good day, guys.
Cheers, lads.
Cheers.
See you, lads.
Cheers, guys.
See you later.